Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Tuesday, the 25th of August, 2020, and it's the evening. All right. A mixed day, but basically a positive day for SPDRs and ETFs. The ones that were mixed to the downside, bonds and notes. You saw the TLT drop. Yields were going up there. We're seeing the GDX was down a bit, but gold was actually higher. Silver market was actually higher as well. Energies were mixed here, but yet in the futures markets, if you go to some of them, they were doing okay. But let's go to the chart action. If you look at the XLK, we still have a gap in the chart, and the market keeps climbing this wall of worry, going to new all-time highs. Still very bullish action. There's no getting away from that. And when you look at the swing line, higher lows, higher high, bullish. You've been holding and staying over the 18-day average of closes. At the end of July, you got over it. You never challenged it again. That's unusual. Almost a month without challenging it. Very, very unusual. What is being challenged over and over is the Bollinger Band, and let's put it up here. And you're fighting at it right now. Markets that go to Bollinger Bands generally get thrown back. The word is generally. You only stay over a band 5% of the time. So what it does is it has to push the band up, back away, and like a truck, ramming it. Now, if you're coming out of sideways action, it's a little easier because the power of that move out of it just keeps pushing on it. Just think of it. You're pushing on that fence with your car. When you're wider than that, it's difficult to do it. That's another analogy that you might want to think about to understand this. The momentum of the market, bullish as can be. This slow stochastic to me is just a super important tool. It's locked in bullish, which tells me that on the pullbacks, this market's getting bought with the objective, the Bollinger Band, drop the market, keep that in place. I think the traders buy again. Lose this and they change their game plan. You haven't lost it yet. SMH has not had that pattern. SMH is caught in right here, the lower Bollinger Band, which it really hasn't hit. It's more or less, and I said that wrong, it's really the 18-day average and the upper band. And you see that over and over. It's not a bad pattern, but it's not as friendly as XLK, and it's not been anywhere near the market to trade like that. You keep losing the momentum, then you come back to overbought, hit a Bollinger Band, and you get frustrated again. Hard market. In XLI, overbought. The market did lose its embedded reading right back here. Generally, when you do that, you make a run to the 18-day average. You got as low as 75, 71. That's pretty far away from the 18-day average, and then you rallied. So what the market's tried to do is come back up to, again, embed. If it fails again, be careful. I still think the market can get back to that 18-day average. I'm not enamored with this market right here. In the energy sector, what can I tell you? This is about as miserable a sideways trading event as you can get. Now, the people that make money on that are the guys that can recognize it way ahead of time, and they'll write puts, they'll write calls. It's called a straddle. They take everything in, or the strangle, actually, excuse me, because what they're trying to do is take everything into the market. The straddles, when they're looking for the breakout on either side, they're not getting that. So this is just taking in that premium. Very hard, very dangerous to do things of that nature. I certainly am not a fan of it, but I am also not a fan of trading in those narrow bands, and that's what I tell my clients. In QQQ, I'm still in the bull camp. As long as you lose an embedded reading, gain it back, I just join into the choir again and say, okay, let's start buying again. And this market's offered a number of opportunities to do that. There are periods when you don't want to be in, but then they come alive again and join the parade. I don't have the concept of high or low. Having done what I do for 51 years, I traded markets, I think it was potatoes once, and I'm going back, way back. Most of you may not be this old. When the bag was really worth almost more money than the potatoes in them. I saw this happening in markets upon markets. Things do happen like that. We laugh about it, but I saw 23 days. I'm pretty sure I'm right. It was 23 days and limit down in the potato contract. Oh God, it's got to be the 70s or 80s. And then after that, I think it got delisted eventually. Why not? Not very liquid. Higher lows, higher highs. Look all the way up here at the 65.31 level. That could be your resistance. Here too, I can't get away from the fact that it's pretty much a narrow trading band, caught, like I just mentioned, between the upper Bollinger Band and the 18-day average of closes. Gold has been in a downtrend recently, but it's now oversold. Will it have any momentum? If it should take out 182.93, you negate this pattern. Wouldn't surprise me then you get back up to the 185.36 level and the market tries to figure out what next. Unfortunately, with today's break, even if that occurred, I can't get a buy signal. I'd have a lower low and a higher high. That's still not one. As for being bearish, yeah, I'm in that camp. The bias is down, but you're too oversold. In the GDX, the miners, same thing. You seem to be running out of downside momentum. You've got some room here, unlike you do in the futures, but not too much. You're at 28, you're already oversold. Do I think new money's going to work on the short side? Might be the way to phrase this. No, I don't. I think they're coming out, and I don't think they've turned bullish. I just think the market's not interesting right here. In TLT, the key to this market to know that you've changed course is to get back over the 18-day average, which on this pattern would have to also get over the last swing line high, and that would give you a flip to the upside. I'd actually turn bullish on that. Do I think it's going to happen? I don't know. We've got the Jackson Hole meeting on Thursday. I don't expect big announcements, but you don't know. And you're oversold. So we have a market that's oversold in a downtrend. One of the main targets has been the 100-day. When you got under it, you came back and fought a battle at it. You're still under it. Can you wash out again to the Bollinger Band? You can, but getting over 166.97, I think, does damage to the bear side of the argument. I don't see any trend in FXE. The euro and the dollar seem to have flattened out. They're going sideways in this pattern, and I don't see a thing that's being done there. What I do think you can take some time out for is all this. Our guides to technical indicators, volumes 1 and 2, they come to you as a link. You open it up, you can print it out, you can keep it anywhere on your computer, save it. It explains all these different parts of the market, ideas, and some of the best used ones in the industry. So if you're looking for a one-stop, free, what is all this about? This is it, folks. Have a good time reading it. It's not that long. Each one's about 23 pages full of examples with charts and everything you want. And as I said, completely free to you. How do you get it? Go to our website. Under free offers on the bottom right, it'll be there for you. Just sign up. I'm Ira. You have a good day.